Most traders blow accounts over this one entry mistake, but this setup got me funded. In this video, I'm going to give you a simple strategy that you can use to help your trading. Now, how you enter the market is completely subjective and up to you. For me, I use a BRC and CPE entry model, so two types of entries, but that is something I teach within ZCFX and I keep quite exclusive. So if you are interested in that, make sure you go ahead and check out the links below. With that being said though, let's jump into today's video. Now, what I'm going to do is I'm going to give you guys a little breakdown of the trade that I've taken today, and then before that, after that even, I'm going to give you a textbook example to explain the logic, and then maybe hopefully try and find some more examples. Okay, it can be applied to any time frame, to ideally a higher time frame the better, because obviously, as we know, with any concept, the higher time frame rules the lower time frame. Right now, like I said, any time frame, but ideally the higher time frame, and also it can be applied to external and internal structure. So this one was based on the H4 Wick Rejection, and that was an internal structure Wick Rejection. Okay, so if we take a look at the H4 here, as you can see, if you ignore this bit of cluttered price action, yeah, you know, it doesn't look very clear, and yes, obviously it's a bit sort of choppy, right? It doesn't really give you any clear range within a balance to trade from, which is fair enough. But as you can see here, what I had noticed at the time of taking this trade or looking at the setup of gold is that I'd seen that we had this range high and this range low form in the markets. Okay, because a price previously broke structure here. Yes, we wick rejected it previously, so this is another sign of, you know, an example, I guess, of a wick rejection over here. So as you can see, at the previous range high and low was this high and this low. Okay, just based on the way that I map out structure. Yes, as you guys, if you follow me for a while, you understand that I don't map structure the traditional way in terms of the highest point and the lowest point. I have a pretty mechanical approach in terms of how I approach it, right? So that was my previous range high and low, and as you can see from there, we mitigated this POI and took out the high, although it just turned into a wick rejection. Okay, this is a wick rejection. Okay, and pretty much what this signals to us is that we're failing to close above the high, therefore we can potentially reverse. And then obviously to confirm the move on the lower time frame, we need to see one simple rule, and that is obviously a market shift or a chock, or however you want to refer to it as, on the lower time frames. Okay, but pretty much what I'm trying to say here is, as price wicked out this high, yeah, this is counter trend, so obviously when you are trading counter trend, you don't want to try and target into new external lows, etc., or vice versa. If we were to flip this the other way around, you don't want to try and target into new highs. Okay, you want to keep it simple and ideally follow with the pro trend, right? Because again, this is counter trend looking to short from here, because again, why? Because the previous range is bullish. Okay, so just keep that in mind. So this here, yes, you can anticipate reversals and pullbacks, but ideally it's better suited for continuations. Anyways though, I won't show you this example because I didn't look to trade this. I took a trade here. Okay, so as you can see, price closed bullish here, then obviously we formed this high over here. Okay, you may even count this as a minor breaker structure as well, but we have this range high here and we have this range low over here. Okay, from there we formed an internal low, so pretty much this is me saying price had pulled back. Yeah, didn't really mitigate anything. It maybe did in the lower time frames, but that's irrelevant. But it pulled back, and then obviously we had an initial move, potential failure swing form, right? So you got to keep all this information in mind. And then, as you can see from there, we then pulled back and took out this internal low. Okay, aka wick rejected it. Right now, at the time, this, and it still is, I believe, but at the time, anyways, this 4-hour candle is still forming. So keep that in mind. Okay, it doesn't have to close. You can anticipate the closure. You can trade with whilst price is still forming. But anyways, if we take a look on the lower time frame, remember that was internal structure. This also applies to external structure. Okay, and as you can see from here, what did price do? Okay, so this is the previous wick rejection that you saw. Yeah, it also wick rejected on M15, so you can jump to the M1, which is exactly what I did. So we had a H4 wick rejection. We took out a previous internal low. This is a previous structure, right, on the M15. We also swept out previous lows there, and you know, this is my liquidity point ASL, right? We took out the ASL lows, and as you can see from there, I jumped straight to the M1 time frame. Okay, I'll show you the M1 time frame, but pretty much my reason for this trade was that, okay, I thought, well, we just swept out significant liquidity. We had a H4 internal wick rejection, and also on the M15 we just also, you know, wicked out the lows. Okay, but to be honest, I prefer to trade H4 wick rejections and jumping straight to the M15 and anticipate a market shift, etc. But because my M15 high and M15 low is here, this is kind of a big range. And at the time, price is over here and we just engulfed here on the M15. I thought, you know what, we're going to potentially pull back. What I'll go ahead and do is I'll show you guys my analysis I'd sent to my team beforehand. on my ZCFX analysis channel in my private mentorship Discord, and you can see there that I have marked out like this, right? I pretty much just mentioned that I was just going to see if we move into this imbalance area minimum, okay, and then obviously see how we react from there, right? And also this is awesome because one of my students actually caught this trade with me. He caught the second mitigation, and as you can see there's a nice 2% return for him there, fixed 2R, right? Very simple, okay? But with that being said, as you can see here, yes, price is looking pretty overextended. We were due a pullback, so this was kind of counter trend M15, but it was pro trend at H4. But as you can see, all right, what did price do afterwards? We obviously hit my 2R, and as you can see, we wick rejected out the range highs, and what did price do? We went back bearish again. So you can now look for shorts, but obviously I'm not going to be looking for shorts as well as the longs previously, because I'm not looking to play ping pong today, obviously with the H4 looking kind of choppy. But the logic applies, right? Wick rejection, and we've reacted, okay? Wick rejection, H4, we reacted. So that's what I'm trying to get at. Wick rejections can tell you a lot. If you can confirm it on the lower time frame, so for example H4, if we just take a little textbook drawing up here, right? So let's just say we get a H4 high like this, right? Price comes back down to the downside. We get a wick rejection here on H4. Let's say we then jump to the M15. So just remember where price is at there, right? This is H4 wick forming, or it might have even closed. But on the M15, we're going to see something like this. All right, this move here will be this move here. M15 lower lows, lower highs, lower lows, lower highs. Obviously, we just wick rejected out this previous low, which is what we saw there on H4. What we're going to be looking for here to confirm the potential reversal to the upside is we're going to be looking for a market shift to the upside on the M15, like this. Okay, then what we're going to look to do is we're going to wait for a pullback into the breaker from this area or the extreme POI, and then react accordingly on the M1 and look for our entry. And obviously, I mean, don't get me wrong, you can hold up to the moon, right, if all the stars are aligned and high time frames pointing to that way, but let's be honest, you know, the trade that I took today, I took a fixed 2R, and that was because the H4 is choppy. Sometimes I'll try and target into the H4 highs, etc., but for this case, there was just simply no need. Okay. Now, I took my entry here for a very specific reason, which is a BRC entry model, which I won't disclose just yet, or at least in today's video, but you can kind of probably guess what it is. Okay, my stops were protected below the previous range low, or the range low at the time, and then as you can see from there, which I've shown you previously in terms of a Romeo's trade, as you can see from there, one of my students for a few years now, he's absolutely killing it. He's just about to secure some more payouts, and as you can see from there, you know, we formed a new range high on a new range low. Price came back down to the extreme, we engulfed, and that's exactly where he took his entry, and also targeted 2R around here. Okay, but because my stops were kind of wider, because I kind of in a later entry, I kind of had therefore to, you know, a bit of a smaller risk reward. I mean, a higher price in terms of risk reward compared to Romeo's. You know, usually I would look to scale into around here, you know, and get into a second position, but I just wasn't too fussed, to be honest. I was happy with my 2R. I was liking how price is moving anyways. So, you know, we put in a new range. As long as we were staying above those range lows, that was kind of the only thing that mattered. Okay. But anyways, as you can see, price run up and just hit my 2R like that. Then as you can see from there, we've seen price sweep out this liquidity and also high time frame wick rejection. Okay, as for what's happened now, that's kind of like still forming, you know, price is kind of still bouncing and ranging, but that's just based on the H4 being kind of cluttered. But what I'm trying to get at is wick rejections really do come in clutch, and you can really anticipate some great moves based on the wick rejections. Okay, another example of a wick rejection would be, let's just say, right, I'm going to be looking inside of my trading times, right, which I refer to as a kill zone because I don't want to try and rename it and get some, you know, heat, I guess you could say. But trading times are times that I trade. These are personal to me based on my data and what's performing. And as you can see from here, right, we took out these lows. Wick rejection, what did price do? Move bullish. Okay, this isn't the best examples in terms of the market is very clear because it's not. But as you can see, we also get another internal wick rejection there. What happens? Price short terms pull back. But you need to make it make sense. You can't just go and jump into any, you know, wick rejection. You can't just say like, okay, price is just wick rejected out this high, let's go short. It needs to make sense. Ideally, you want the stars to align. Ideally, you want the market on your side in terms of the structure. So it's better to have the structure on your side as opposed to just trying to, you know, ride against it. And this happens all the time. Sometimes you get an initial mitigation off your POI, price will short term move like this, and then come back deeper to liquidate your stop loss and potentially wick reject like it did here. and then continue bullish, right? This is something you see quite often. Another one would be your USD today, right, on the M15. What did price do here? Well, during obviously pre-London Frankfurt Open, we had seen price rally to the downside, sweeping out the ASL lows. Okay, from this point onwards, we then pull back into this high. We mitigated this obviously POI, but we failed to stay below the POI. We just more so, well, we stayed bearish because obviously this is a bearish range. We've got the range low, range high, and as long as we're staying below it, aka, you know, closing back inside the range and wick rejecting it, we can still look for shorts all day long. So as you can see from there, we got a wick rejection. Okay, what do? We jump down to the M1 time frame, and what does price do here? We get a market shift to the downside. We then pull back. This is also a nice little sign, is that, you know, when you compare and measure the move from here, you know, the bearish move and then the bullish move back up to the same sort of area, you can clearly see that the momentum is obviously bearish based on this bit of price action and compared to this. So this is kind of a good sign. Got a bit of a complex pullback there. So we shifted bearish. This might not be your low from where the market shifted. It might be over here, or over here, the lowest point, you know. It really depends on how you map up structure. But like I said, the way that we do it at ZCFX trading is completely unique and different. It's mechanical, it's rule-based, and you're not guessing which high or low you should trade from. Okay, from there though, we formed a new range low and a new range high. What did price do? We pulled back up into the extreme, and then we gave a nice clear entry signal to go short, right? And that was just based on M15 wick rejection. Happens all the time, folks. Happens all the time. And like I said, you don't need to, you know, try and, you know, I guess you could say trade every wick rejection, but it happens a lot. Another one was here, 11:30 today, right? This is just from today's price action alone. Imagine how many other opportunities there are based on previous price action, okay? Wick rejections tell you a lot if you can time it well. Okay, what did price do here? Wick reject. Bullish. Okay, was there an M1 entry? I don't know. Let's take a look together, shall we? I wasn't on the charts at this time, right? How you map a structure, like I said, is completely up to you. Oh, actually, I believe there was an entry opportunity here because another one of my students caught this trade. FA. 2R. This is the same exact price action. Wick rejection. Nice 2R. See? We're absolutely killing it at ZCFX trading. We are. We're truly taking over the industry, and I completely mean that. What I'm about to launch in terms of Mentorship 2.0 is completely different. It's revamped. It's new. It's fresh, right? Anyways, going back on topic, I don't mean to blow my own trumpet, as I like to say, but as you can see from there, shifted, pull back, candle. That there, 1, 2, 3. That's a CPE entry model. If you know, you know. Longs, boom, 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 into the M15 internal highs. Yeah, I mean, if you want to carry it higher into the M15, more deeper into the M15 range, you can. But remember, what is the trend at the time? It was bearish, right? Range low, range high. So this is counter trend. Okay? But yeah, I can sit here all day and show you tons and tons of examples, but that'll just be wasting everyone's time, right? So let's just go over it again quickly in terms of a textbook view, right? So we'll draw up higher highs, higher lows, higher highs. Just keep a textbook, you know, keep it simple. And then let's just say we're going to trade a counter trend, right? Maybe we have a bit of a bigger range. Maybe we didn't really fully tap into the discounted part of the range. Maybe we can come back deeper. Okay, let's just go with a counter trend at this point. Okay, so let's just say price is trading higher, you know, creating higher highs and high lows in the lower time frame, because that's how the market moves, right? And then we come up to the highs, and then we fail to close above, or maybe we don't close above just yet. Maybe it's wicking it out, but when we drop to the lower time frame, aka the 15-minute, right, because this would be ideally 4 hour, or maybe you want to pair this as the 15-minute to the 1 minute, maybe you want to pair it to, I don't know, the daily to the 4 hour. Okay, ideally you need 2 time frames working together to confirm that you're anticipating the reversal to happen, right? Like the H4 and the M15 to confirm it, or the M15 and the M1 to confirm it. The higher the time frame you go, the more likely it is to play out. I personally like to use H4 and M15. These are my exact time frames I use. I'll be honest, I rarely use the weekly though, but the daily 4 hour, 50 minute and the 1 minute is what I use. I don't use the 5 minute. I don't even know why it's on there. You know what? In fact, let's just remove it while we're here, right? But I literally just stick to these time frames, but my primary time frames that I zoom out to on pretty much inside of my trading times are just literally the H4, M15 and M1. And if I know one of the M15 H4's at, and all I do is just stay on the M15 and M1. Okay, but what I'm trying to say here is, guys, let's just say that we're on the M15 now. Okay, so like I said, price is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, we then get a wick rejection of the previous highs here, which is exactly this high there. Okay, now this could still be forming. We could close back inside of the range and then follow M15. It's completely up to you. You know, it's just simply up to you. It doesn't matter if it closes and then, you know, or it doesn't close just yet. Like I said, it's up to you. But what we're looking for is one key thing, and that simply is an M15 low to get taken, aka a market shift to the downside, just like so. Okay, from there we're going to wait for a pullback into this area of interest, right? Whether it's a breaker from here or the extreme POI, and then we're going to jump to the M1. And then what we're looking to do is obviously anticipate price to pull back. Now at this point, if I just move price a little bit across, remember this is the M15, what I'll go ahead and do is draw up M15 and H4, right? Now let's just move price where it's kind of at in the range, right? Now remember, you're not looking to try and swing this move back into the lows or the external lows, etc. Right? You're just looking to capitalize on a shorter term move. You don't need to try and hold into the new swing lows or the swing highs. Just get your little nice 2R in and out and just dip, right? One of my students is up 140R from the past 5 months, just using standard 1% risk. He's not over trading. He's taking a perfect amount of trades. But that's just because he's super consistent. He's absolutely fucking killing it. And that's what we do at ZCFX. We're killing it. If you put in the work, don't get me wrong, I'm not going to say it's for everyone. I'm not going to say the strategy has a 100% hit rate for everyone. It doesn't. A lot of people come into this mentorship with a shit mentality and don't survive very long. But if you're serious and you're dedicated, of course, you're going to absolutely smash it. You're going to exceed and accelerate so much quicker than everyone else. Okay, and by that I mean just getting involved, asking me questions, asking the students and other coaches questions, and just getting stuck in. Okay, we've completely changed from how we were a few years ago. We're completely new. Even last year, there's a huge difference from last year to now, because the information is more clearer. We've gathered more data. Okay, we have a bit more of a stronger edge. We understand that our edge is our senses, believe it or not. But anyways, going back to this, okay, like I said, you're not looking to try and capitalize on a short-term move, but what we're going to be looking to do from this point onwards, as price taps into our M15 POI, we're going to simply look to drop to the M1. Okay, so on the M1, what I'm going to look to draw now on the M1 is this move from here to here, and then obviously the reversal. Okay, so let's draw that up. So on the M1, we're going to get something like this: high highs, high lows, maybe some breaks to the downside, maybe some breaks to the upside, whatever, right? Then we tap into our POI and we're looking for a shift to the downside. We get a shift to the downside. Now what we're going to be looking to do is wait for a pullback on the M1, and then we're going to utilize one or two of our entry models. But like I said, how you trade is completely subjective and up to you. But the way we trade, we have 2 entry models ideally, which is a CPE entry model and a BRC entry model. And then anyways, from there you can go ahead, enter the trade, and then anticipate price to continue bearish, at least for the short term, because this is counter trend. Okay, now actually, if we just keep that up. Now for a pro trend example, that would also be very simple. This would be pretty much based on, let's just say price closed above, right? We formed a new high, we're inside of this range high and this range low. We then pull back into our POI, but we don't really give any clear reaction on the M15, aka M15 does not shift bullish just yet. But instead we wick out the low. Okay, but let's just say, you know, the daily's bullish, this is the range high, or this is the range high, or low, sorry, and the high on the daily, overall bullish, the weekly's bullish, etc. So we have a pretty strong bullish bias, right? As you can see from there, right, H4 Wick Rejects, let's just say, okay, and we're going to simply look to repeat the process again on the M15. So let's just start off from around here on the M15, right? We form a new high, lower lows, lower highs, lower lows, lower highs. We tap into, well, sorry, not tap into, but we tap into the range lows, we wick it, right? Or the wick is still forming, and then we get a bullish shift to the upside. Again, we're going to repeat the process. We're going to anticipate a pullback into the POI or the extreme, and then we're going to drop to the M1 once we're in there. And on the M1, we're going to get something like this again. Then we're going to repeat the process again and look to trade longs back up. But guys, that is wick rejections. That's just one sort of concept that you can apply to your system from today. Go ahead and backtest it. Ideally focus on the H4 wick rejections and anticipate M15. Bearish shift, bullish shift, depending on the overall directional bias. Okay. Maybe not look for you don't need to go ahead and backtest it. What I would do is just go ahead and review previous price action. Feel free to review the price that I've gone over today, which is on EU and on gold. But this happens everywhere. Happens on every pair, every time frame. You just have to learn to spot them. You know, it doesn't happen every day. Some days are just different types of entering the markets. For example, just standard, classical, break, retest, etc., pullback, whatever you want to refer to it as, right? And some days it's a wick rejection, some days it's others. But in this case, it was a wick rejection. So you can go ahead, study it, backtest it. It happens all the time, you know. I think a lot of it depends on how you map your structure. If you want to learn how I map up structure, I've actually done a masterclass on market structure somewhere on my YouTube. You can go ahead and find it, or just type in market structure masterclass on ZCFX trading. Because I promise you now, the way we map structure, I don't think anyone else does it like the way we do, honestly. You know, because a lot of people, they're trying to guess where the highest point or the lowest point before the break is, or before, you know, the bearish or bullish break. We have a very simple rule-based mechanical approach, right? And that also allows students like Dean from this morning to withdraw a 9k payout. Right, this is just from this morning. As you can see, 7:48 this morning, about to hit withdraw for the week. He's done trading for the week. He's earned 9 grand for this week, and he's going to go ahead and withdraw that. This is in his Rise account, by the way. So this money is all his, right? 8960, and he's going to go and have a nice day, right? But guys, been a pleasure speaking with you today. If you want to learn more, the links will be down below. No stress if not. Make sure you keep consuming my free content. And if you have any questions, pop me a message over on Discord or Instagram. I have free Instagram, I have free Telegram, I have a lot of free resources out there for you to learn and start applying today. But guys, if you want the premium mentorship and more personalized one-to-one support, you already know what to do. But guys, I hope you have a blessed weekend ahead. Or if you're watching this later in the day, I hope you have a blessed day or a blessed week. Okay? But with that being said, guys, it's been your boy Luke. Take care. Have a great one.